Hey there, it's Orphe Diwangi, the co-host of the Everyday Economics podcast. Exciting news! Check out my new weekly column at thecentersquare.com. Join me as I break down complex economic trends in a way that's easy to understand for everyone. Check out the column every week and stay informed about the economic forces shaping our world. Be sure to subscribe to the Everyday Economics podcast and visit thecentersquare.com today.
Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, a production of America's Talking Network. You can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on Friday, June 28th. And joining me as always, Dr. Orphe Diwangi, PhD economist. Dr. O, I look forward to your Monday columns in the Center Square.
Well, that's exciting. I'm glad people are paying attention and they're loving it. That's great.
Yeah, I think it's a really nice addition to the offering at the Center Square. I mean, in your Monday column, what you do is, without prognostication, sort of outline what's coming up or what to watch for in the economy in the next week. And so what will you have for the week ahead? The week of July 1st.
Yeah, number one, of course, the main event's going to be the jobs report the next week, right? So everybody's going to be looking at the jobs report and everybody's going to be like dissecting every little part of it, starting with the growth rate of hourly earnings. If we see wage growth taking higher than expected, you could see a rebound in yields. You could potentially see your stock portfolio, maybe not down too much, but that crazy increase that we're seeing this week might actually come to a sudden halt, right? And so, we're stronger than anticipated wage growth can push yields higher, undoing the progress that we've seen lately, right? You see yields have come down slightly, mortgage rates have come down slightly. So I think that's what we're going to be looking for in next week's job report. A strong employment report is good for stocks. It means people have money to spend. It's good for everything. Good for the housing market. It means people are going out there. They have jobs. They're going to go and spend, and the economy is going to continue. The expansion is going to continue, right? So that we want to see job creation. What we don't want to see is wage growth accelerating. We want to see an increase in labor supply, and, the balance between supply and demand somewhat restored, and wage growth easing to a level that's consistent with the 2% target. Well, wage growth is still too high. I think we have wage growth at about 4% on a year-over-year basis, and that's just too high, right? So it has to continue to ease. Why? Why do I say that? Because if wage growth remains very, very high, with the latest inflation reports that we've gotten, right, it could actually stimulate a real consumption, right? Remember, real wages have increased, right? Meaning your purchasing power has increased, right? And what we don't want to see is the consumer going out there spending with reckless abandon during the summer, going to every concert, traveling around, doing all that stuff, right? We want to see a more moderate pace of spending than we did last year, for example. Remember last year, with crazy spending, we got into the fall, yields soared, mortgage rates got up to about 8% in October. We don't want to see that again, right? And then we had inflation kind of stuck for a while, right? So we don't want to see that. We want to see the continued progress towards the Fed's 2% inflation target. And that's going to take consumers' savings, a higher share of their income, paying down their debts maybe, just kind of like taking it easy for the summer.
Well, you take a look at the schedule for the coming week. And of course, Independence Day is Thursday. So, this is somewhat atypical week, but there's stuff going on. We're going to see, we'll get initial jobless claims on Wednesday.
Yeah, they're going to tell us something about whether the labor market's, strengthening or slowing. But now again, very noisy data, the jobless claim stuff. I look at it, but I don't really look at it.
Without a doubt, Friday's the highlight of the week.
For sure. But before we even get there, I just checked the schedule. Monday, you got construction spending. Construction spending is expected to fall, right? Along with the decrease in housing starts that we saw in May. So I expect that to fall, spending, at least private spending to fall, just like it did. It did a little bit in March. I expect that to ease somewhat with mortgage rates remaining somewhat elevated, the housing market cooling, inventory increasing, housing starts are taking up. Oh, by the way, and a ton of homes still under construction. I think we had more homes. We still have I think we have to go back. Hold on. We have to go back to, I think, 2007 to see this many homes under construction. Spending, private spending, residential spending, in fact, residential investment in 2024 is probably going to ease a little bit, as a result of all that. Then you have the Institute for Supply Management, Manufacturing and Services, PMI, right? And by the way, PMI stands for Purchasing Managers Index. They basically track economic activity in the manufacturing and services sector. The ISM for manufacturing is expected to stay in contraction territory, although we've seen a bit of an uptick lately, right, in the last few months. But I think that's likely. It fell again last month, so we're likely going to stay in contraction territory, meaning the economic activity is shrinking in that sector.
Well, how about the trade deficit number? I mean, just to kind of just to map that out. I mean, in the last reported period, which was May, $74.6 billion trade deficit for the United States. How relevant is that to the broader discussion about the U.S. economy?
Totally. I haven't looked. I'd have to pull up the latest GDP data. But yeah, I mean, unlike a lot of people, I don't worry too much about the trade deficit. So not a big concern. In fact, we spend a lot. We still spend a lot. It's good for our economy. The fact that that when you look at consumption of households household consumption from domestic producers, still pretty strong. You look at Americans borrow and spend. That's what it is. And that kind of supports our economy. What we don't want to see is fiscal policy really kind of keep inflation elevated, right? We don't want to see fiscal deficits continue to increase at an unsustainable pace. That's what we don't want to see. But ultimately, I think we're still in good shape. So I don't pay too much attention. And I know there's a lot of people out there that are worried about trade deficits. I'm not too concerned. It's a trade stories. How's the rest of the world doing? The rest of the world is cooling. That means more money is coming into this country. It's a good thing, not a bad thing. Our U.S. economy is still pretty strong. People are spending. They're easing a little bit on their spending, but they're spending both buying stuff from abroad, buying stuff right here at home. Not a bad thing. It's a healthy economy. We still have a very healthy economy. In fact, maybe healthier than most. So not a number I'm worried about or I even try to pay too much attention to. What I'm going to pay attention to, though, is those ISM numbers. And like I said, I think ISM services could be easing, still expected to be in expansion territory still, but perhaps easing a little bit is what we'd like to see. And then again, we got that PCE report, right? And the PCE report basically says income rose a lot, 0.5% in May. So perhaps we see an uptick in economic activity. We'll see.
All right. Well, I appreciate your thoughts as always. And remember, Dr. Orphe Divoungui's column runs every Monday at thecentersquare.com. And you can find the Center Square Newswire in news outlets all over the country. And I anticipate seeing Dr. Orphe's work making its way over there and getting larger distribution. For Orphe Divoungui, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.
Hey there, it's Orphe Divoungui, the co-host of the Everyday Economics podcast. Exciting news! Check out my new weekly column at thecentersquare.com. Join me as I break down complex economic trends in a way that's easy to understand for everyone. Check out the column every week and stay informed about the economic forces shaping our world. Be sure to subscribe to the Everyday Economics podcast and visit thecentersquare.com today.